Our next guest says tech is still safe to buy, and if you miss the run, there are two names that you can still play for a catch-up. Let's go off the charts with Fundstrat's Rob Sluymer. He's over at the Plasma. Rob, take it away.
Great. Thanks, Melissa. Listen, I think it's going to start to get really interesting here as we move into the second quarter. There's a lot going on. The market's kind of a long way to the upside. Let's just take a look at the S&P. And we've had this 20% bounce, and we're into all that resistance around 28.15, 28.20. Everybody's focused on that number. But the key point that investors need to be focused on is that we are still in a much bigger secular bull market coming off that 200-week. We think this was a major cycle low we saw in December. So even though the market's up a long way and we're getting into these levels where we're going to start to see some churn in some of these stocks, given the run they've had, there's still names that we want to buy. Let's take a look at the Qs. Tech has obviously been leadership. It continues to be leadership. When we look at this long-term relative performance profile, it's still building to the upside. And even though we've had a pretty big run here in tech, it's come off that 200-week moving average. So we still remain very bullish on technology as a leadership area. But as the discussion has just progressed through, a lot of these stocks have run a long way. We've seen software go up an incredible amount. Cloud stocks, 5G stocks, IT service names, they've all had a huge pop. But some of these laggards, like Apple, which haven't moved that much, we think are really timely. And the key point here, again, when we look at the move off that 200-week that we had back in 2016 and back in 2014, and here again, we think that's a major cycle low. This is a stock that just moves through a period of contraction and then acceleration, and we think we're in one of those periods. And when we look at this relative performance in here, it's just starting to turn up. So as many of the leader stocks start to slow down and consolidate as we get into the second quarter, we think Apple's a really timely name at current levels. Now, looking at some of the other FANG names, some of them haven't performed as well either, but we think Netflix is pretty timely here at current levels. It's bouncing around that 200-week moving average. It hasn't moved as far. It's consolidating. It looks to us like it's just getting ready to go. Those are two names within the tech space. They're laggards. They're big. They're liquid. We think you can add more capital to those names.
All right. Rob, why don't you come on over? Shelby will bring the chair over. Thank you,
Where's the music?
Yeah,
Where's the music?
No, Carol Burnett's very
Long
quiet.
story, but we are not permitted to play that. So instead, listen to this. We have fake game show music.
Game show music.
It's fake game show music.
It's nice.
All right.
It's not
Fantastic.
And Rob got to hear it firsthand.
We really let them behind the curtain on that, Mel. I mean, that was some inside baseball.
People like
Fast
to
money.
see behind the curtain of Fast Money. Sometimes you don't.
Sometimes it's ugly.
Look to see. Yeah, I know. Sometimes you don't want to see. It's like watching the sausage being made. Rob, you mentioned software just a little bit. That's been an outperformer.
Huge.
This year, huge outperformer. It sounds like you think it's going to roll over.
I think it's going to pause here. You look at some of these names that have had. I mean, some of these stocks have gone up so fast, so quickly. We're getting into the end of the first quarter, going into the second quarter. We got earnings coming up. I wouldn't be surprised to see some pullbacks and pauses. But the key point, again, if we look at the big cycle, what we see happening, these are opportunities to add to these names. They're clear leadership. We came off the lows in late 18, early 19, and they resumed their leadership. So there's not a lot of evidence yet that that's rolling over. It's just a function of timeliness. And as traders, I think you'd see some people take profits on some of these names after they've run up. We want to be adding to those names.
Hey, so Rob, the S&P 500 chart, we just looked at it. It made a new multi-month high the other day. It's obviously come in a little bit. What do you make of the Russell 2000? Obviously, it outperformed on the way up off the lows in December, and now it seems to be a little weaker on a relative basis. What does that mean to you?
Let's put it in the context of other things that have pulled back. We saw some semiconductors pull back, like semi-cap equipment names. We saw lumber pull back, oil paused, emerging markets paused. To me, it's all a function of that risk on is starting to take a break and pulling back. I actually think it's really healthy. I don't think it's failing. I think it's just rotation. You're getting money moving into some areas that are leading. I actually think that a lot of these names that are pulling back are really timely. I think semi-cap equipment, for example, is a perfect example of a group that's rallied, pulled back, and looks like it's getting ready to go again. So I think you're going to see a lot of rotation going in the second quarter. I think small caps come back on.
Rob, broader market, I thought the S&P was going to fail a while ago, but 2,800, everybody talks about being a huge level. Yet we've been here now for almost probably 3 weeks.
Yeah.
And one of the things I say, market doesn't give you a long time to sell effectively the high. Does that mean we're going higher from here?
I think we get a marginal pullback, some consolidation. If you go back to 2016, the second quarter, we ripped off those lows, then we traded sideways for 2 months. I think we've got another 2 months ahead of us of just sloppy, rotational environment. People aren't going to sell the market. They're going to rotate into areas that have been lagging. It's one of the reasons why I like Apple. I don't think you got a lot of downside in the equity market.
Robert, looking at Netflix again, you pointed out you think the consolidation is actually a pathway to break out. My view is it's a company that really peaked in the first kind of third of last year and has been struggling ever since. And I obviously have a fundamental view. There's an enormous amount of competition. Couldn't that chart be telling you? I mean, while the market it's underperformed the market in that period.
It has, and you could be very well right on this. So many names peaked in the first quarter of 2018. Huge bear markets, rebounds. I think, again, if we look at that as in terms of a 12-month bear market, a cycle low at the end of the year, a big rebound and a pause, I think it goes higher. We'll see. I'm sure we'll debate this later on.